everyone. Welcome back to Navellier Market Buzz, episode 31. I'm Crystal Navellier, and I'm joined again this week with my father, Louie Navellier. Dad, I would like to start out this week talking about Lamb Weston. I believe Mom actually owns that. It's the French fry company. What do you expect for them?
Well, I used to own and manage accounts. I did sell it some time ago. Your mom has held on to it in her personal account. But their sales are forecast to be up 2.5%. Earnings are forecast to decline 27%. I owned the stock when there was a potato shortage and the price of French fries went nuts, and they are dominate French fries. The stock has had an erratic earnings surprise history, but as soon as it surprises, it should take off. Again, it is a monopoly. It's based in Boise, and I'm not sure what caused the French fry shortage, but they dominate French fries. And if you go to the supermarket, you'll see their bag. It's usually got a big picture of Idaho and on it. And uh, for frozen French fries, they're good. One last comment for everybody that lives in Salt Lake City or of course Idaho, they know never freeze the French fries. So their French fries are better there because they never get frozen.
But if you do have to freeze your French fries, then the best way to reheat them is an air fryer.
There you go.
So now, Dad, what do you expect for CAG?
Well, that's Conagra Brands, of course, and their sales are forecasted to decline 4.3%. Earnings are forecasted to decline 23.7%. So this company has major food brands like Bird's Eye, Marie Callender's, Duncan Hines, Healthy Choice, Slim Jim. I can go on and on. If they can beat their analyst estimates, it will firm up. But right now, I think the stock is really being hurt by a strong U.S. dollar. And this is a big multinational company that exports a lot of their frozen vegetables, and the dollar strength is really hurting it. So while we're talking about stocks, Crystal, you were in Aspen, and I asked you to visit the Revolve Group store with your friends. So what was your impression? Is it a good store? Is their stuff still expensive, or what was your impression?
Yeah, it's interesting because we've been talking about them for quite a bit, and it was interesting to see how different the Aspen store is from the LA store. The Aspen one is more of a collective. They carry a lot of other brands besides Revolve. So they had like designer brands, designer shoes, and a lot of actually vintage stuff as well. So it's more of a curated collection rather than just the Revolve store. So I think that they're tailoring more to their audience rather than just their brand. What are your expectations for Revolve moving forward?
I'm very happy with the stock. Their forecasted sales and earnings remain on track, and it's a hard stock to follow because they sell through influencers, as you pointed out. But they got a unique niche, and hopefully their customers have a high disposable income. And that's what they've shown before. But you got to be careful in retail. Lululemon, for example, disappointed, and they really punished that stock. So retail is a tough business, and you better have rich customers that want to pay a premium for your goods.
Switching over to economic news, what do you expect from the ISM Manufacturing PMI on Tuesday?
Well, it should be good because the auto starts are way up. We picked that up on factory orders. I think factory autos rose 8.4% in February, and that made factory orders have the biggest jump in a year. So that's going to show up in the ISM manufacturing report. Should be very good. And it also should be the third month in a row of a positive gain in the manufacturing report after 26 straight months of declines. So. There is a manufacturing recovery going on in America.
And what about the ISM Service PMI on Thursday?
Well, that's going to be much more crucial because that really accounts for more economic growth in America services. It had gotten surprisingly weak here. It's still above 50, which signals an expansion. So we want to see if there's some green shoots in that report, but I suspect it's still going to be lackluster. We've had multiple surveys that showing that consumers are moody, and the Conference Board had a pretty big drop in their latest consumer confidence report. That alarmed me, because I really like the Conference Board report. So I do expect the ISM PMIs for both manufacturing services to be positive, but on the service side, probably less so than in the past.
Now, for the ADP payroll report on Wednesday and the Labor Department report on Friday, what insights can you give?
Well, we do want to see the economy continue to create jobs, but the ADP report's a private payroll report, and it'll give us a feel for there's some uncertainty out there and whether companies are still hiring despite the uncertainty. But when we get to the payroll report, then that starts to count the government jobs. And because of what Elon Musk is doing, and we do expect more of the federal jobs that are being eliminated to show up in that report. If we get a weak payroll report, it will be a signal for the Fed to cut rates. But right now, I don't think they're going to be cutting because the PCE report we had on Friday was not that favorable. It showed a slight increase in the core rate. I think that surprised a lot of us because we know the components going in there. And that's just another reason the Fed is going to wait a bit. And Jerome Powell said the inflation is transitory, and based on the last PCE report, that looks like what it is. Just so everybody knows, the Fed has a dual mandate to keep unemployment low and also keep inflation low. And so it's really the labor market and the inflation statistics that will determine the Fed policy, as well as market rates. When market rates fall, the Fed has to kind of catch up with them. But that's why those job reports are so important and influences Fed policy.
So the trade deficit is actually supposed to be announced on Thursday. Do you think it's going to be good or bad?
Horrific.
Mm.
Yeah. It's surged 34% in January. I'm sure it's surging even more, if not in February. Companies were dumping their goods on America to try to beat the tariffs. And it's so hard to explain to everybody what's going on, but if we count the trade data that we've seen so far, and the fact that the gold supplies going to America have surged. They surged 43% in January and 25% in February. That's based on the COMEX report. We are looking at a 4% deduction from GDP growth just from trade imbalances. So we do now expect the GDP to be negative in the first quarter, but largely due to the trade imbalances. Basically, the stockpiling of gold as well as everybody dumping goods. And of course, April 2nd is Liberation Day, according to President Trump. And we'll see how many of these tariffs that he proposed will stick. There are very serious negotiations. Countries are begging Trump to basically curtail some of those tariffs. But based on what he just did, it looks like he means it.
Finally, can you expand on the 25% tariffs on auto imports? And with that being said, will the foreign automakers move their manufacturing to America to circumvent these tariffs?
That is what President Trump is trying to do. So let me elaborate exactly what's happening. So there's this free trade agreement called USMCA, U.S. Mexican Canadian Trade Agreement. It was negotiated under Trump's first term. It expires in 2026, and they'll be haggling over it. But basically, that 25% tariff will be on non-U.S. content. So this really does hurt GM a lot because GM makes a lot of their vehicles, like the Traverse, the Equinox, in Mexico. Ford actually has the most domestic production in America, but um, they have a lot of aluminum in their vehicles, and that aluminum comes from Canada because Canada has cheap electricity. And like the F-150 truck, that engine is made in Canada. It's an aluminum block engine. So as American as Ford is, and they kept more plants in America, they'll get dinged on this as well. Uh, Trump just essentially wants the entire German auto industry to pick up and move all their manufacturing to America. And I'll be honest with you, it sounds pretty good because our electricity is a fourth of the cost of what they pay in Germany. Germany has this industrial flight because the electricity is too expensive. Also, the EU is forcing Germany to only make electric vehicles come 2035, but all their profits are in the engines or what they call ICE vehicles, internal combustion vehicles. And so, if I'm BMW, Mercedes, Volkswagen Group, I say, yeah, it's better move to America. So Volkswagen Group is looking at going from two plants, which is Chattanooga and the Scott Motors plant in South Carolina, to potentially four. Build an Audi plant, build a Porsche plant. Um, BMW and Mercedes both have plants in America, very successful. So this is what's going to have to happen. Trump has also said he'll give visas to their workers to come here. So they are freaking out in Europe over this. And Chancellor Merz, the new incoming chancellor, is not handling this very well. Okay. What he should have done is he should have reactivated the nuclear plants, given Germany cheaper electricity. But he made an alliance with the Green Party, who doesn't want the nuclear plants reactivated. And I think this really hurts Europe and Germany the most. I'm a little confused though, because when Trump met with Keir Starmer, the British Prime Minister, he implied there was going to be no tariffs with Britain, and we run an 11.9 billion-dollar surplus with Britain, at least we did last year. And so this goes on Britain now, and so that means if you order a Range Rover, you might be paying up to 25% more for it, because that's obviously a foreign source vehicle. So. This is going to be very interesting. Now, if we join the British Commonwealth, which was proposed by Keir Starmer, I think the tariffs would disappear. The reason I'm bringing Britain up is, you may know, I have a fairly sizable deposit on a British car that is supposed to come in the first quarter of 2017. And we got a curt email from them about these tariffs, as if they might try to change the price on me. So I certainly hope Britain gets exempt and I won't have to pay the premium. Ferrari, by the way, announced that they are doing a 10% increase on most of their vehicles, but not all. They had some inventory move on other vehicles. So Ferrari's going to eat some of the tariff increase, and I think most of the foreign auto manufacturers will be running special finance deals, lease deals, and to try to mask the tariff increase. But Trump's also countering that, if you buy an American vehicle and you finance it, you can write off your interest. So this is what he just did to the foreign auto industry is devastating. And if I was them, I'd move all my manufacturing to America, and the Germans have an advantage because they have the plants here. Of course, we have Hyundai plants, we have Japanese plants, but there's a lot of plants in Mexico that might have to be moved to America longer term. So this is also going to be really bad for Mexico. So Canada's in a recession, Mexico's in a recession, Britain's in a recession, France is in a recession, Germany's in a recession. So we have sent earthquakes around the globe, and the recessions are going to be exasperated by what Trump just did. But the UAW loves it. They're praising Trump. Sean Fain was adamant against Trump during the campaigns, and now all of a sudden he's his best buddy. So this is just fascinating to watch. But it also did make the market more volatile. So Liberation Day, April 2nd, is going to be a big deal. If I was Trump, I would let Howard Lutnick talk more about this than anybody else, because he's seems to be the most excitable person that's pro-tariff right now, and he basically is trying to eliminate the IRS with tariffs. And if they're successful, then most of us won't mind.
And finally, I'd like to answer some subscriber questions. One of your subscribers wanted to know what your thoughts were on the stock U.
Yeah, that's Clear Secure. They're the ones that sign you up for Clear at the airports. They've had an erratic earnings surprise history. In the third quarter, they missed by 3 cents. In the fourth quarter, they beat by 61 cents. That was a big beat. Their sales are forecasted to grow 16.2%. Earnings are forecasted to only grow 8.6%. So it looks like their margins are starting to come out of compression. But again, that was a huge beat last quarter, 206% surprise. So again, I have this under management. It never got added to any of my newsletters because of more erratic earnings surprise history. So it's worth holding, but also we have to make sure that it avoids any of the Doge cuts, although it is an independent contractor helping the government.
Now, one of our subscribers wanted to know about United Airlines, which was down, but it still has an A rating on your stock grader. Can you explain this?
Sure. So the fundamental scores are mostly quarterly data that gets updated every time earnings come out. So they don't change much, although one of the variables does, which is analyst earnings revisions. Okay. And the quantitative grade is based on how a stock moves week by week relative to market. We're looking for what we call high alpha stocks, stocks that kind of zig when the market zags. Alpha divided by volatility is our quantitative grade, and that overpowers our overall grade. United is obviously had big earnings beats. Their sales are forecast to be up 6.9. Their earnings are forecast to be up 632.1. The analysts have trimmed their estimates so here just a bit, so that would lower the fundamental grade just a bit. But yeah, there's some chaos in the airline industry. Also, fuel prices are pretty low, so that helps their profitability. But things like the Heathrow Airport uh, shutting down for a few days, that did mess up the airlines. And I don't know if you knew there were a few planes going over the Atlantic that had to make a U-turn. So, but United, to be honest with you, is a very well-run airline. I also recommend SkyWest and Alaska.
And lastly, one of our subscribers wanted to know what your thoughts were on Lockheed Martin versus Boeing.
Well, I don't have either stock right now. Lockheed Martin is actually being sold in some of our accounts. Boeing got the big fighter contract for the F-47, which is an interesting name because we have the 47th president in office. But normally Lockheed Martin gets the big fighter jet contracts, and now it's going to Boeing for a change. So, but Boeing is a big commercial airline company, and although this is a win for Boeing, it's not going to affect their earnings as much as you might think. So, Boeing still has other problems with its commercial airline division, its space division. Elon Musk had to rush the SpaceX capsule to get the astronauts out. So, this is something Boeing couldn't do. So I hope they make a great fighter jet. Good for them. Lockheed Martin used to dominate that business, and that's why Lockheed Martin isn't as strong as it used to be.
Well, thank you so much for answering all my questions. And thank you to you all again for liking, commenting, and subscribing. Once again, if you want to purchase Louie's new book, it'll be in the description below. If you prefer listening to us on Spotify, that link will also be below. But if you have any other questions that you want us to address in next week's video, please leave them in the comments below. And until then, we'll see you next Sunday for a new video. Thank you so much.